Hey, Marcus.
Hey, how's it going?
Good. How you doing? Hey, thanks for taking the time to join me. I really appreciate it.
Yeah, of course. Can you hear me?
Yeah, I could hear you.
Yeah,
Um,
of course.
yeah, I really appreciate it. I know you're a busy guy, so yeah, so I'll just get right into it. So you're a certified financial advisor. You have an MBA. You're a asset manager, so you help people build portfolios. You played in the NFL. You played for the Chargers. You're a successful model, entrepreneur, actor. I mean, you do it all. You're a jack of all trades, so it's really impressive. And he's on a popular TV show, All American. So congratulations on that, by the way.
Thanks, man. Yeah, these last, what year is it? 2021. These last 4 years have definitely climbed the ladder as far as where I want to be in life. And it's just like all the groundwork that I did beforehand is now starting to translate in fruition. So I'm excited. I'm thankful for my journey for sure.
That's amazing. Yeah, you have a very impressive education background too. You went to school in London, I was reading.
Yeah, so I went to undergrad. So, okay, a little synopsis of who I am. So, I'm born and raised here in Los Angeles, California. Um, then went to undergrad in Kansas and also in Pittsburgh, Pennsylvania. Then I went to get my MBA in London. So I finished with a global business finance degree, and then that's when I transpired to Jacksonville Jaguars for rookie minicamp, and then led on to the Los Angeles Chargers.
Yeah, so you played with the Chargers in, was it 2018? Is that correct?
Yes.
I can't, your audio cut out a little bit. Uh,
Yeah, 2019.
I'm sorry, your audio cut out a little bit. Uh,
Can you hear me now?
yeah, it's just a little bit faded, but I don't know if maybe you're, uh,
Let me try to check. How about now, Tony?
yeah, that's better. That's better.
Yeah, so for 2018 and 2019.
Yeah, so you played with, I guess it's pretty relevant now. One of my, I think he's a pretty underappreciated player. Philip Rivers retired this year.
Yes,
Uh,
he did. He's
what
probably
was,
going to start coaching his son and enjoying that retirement life.
yeah, what was your experience around Philip Rivers?
It was cool. He wasn't really talkative to me, if that makes sense, because obviously he's probably seen 100 guys, like million guys come in and out. But he's a good guy. It was so interesting, like watching him on TV and YouTube growing up, and then like I remember that first catch I caught from him. It was just like, wow, it's just crazy, you know.
Yeah, that's amazing. Yeah, he's by all accounts he's a great guy. So definitely a Hall of Famer in my book, anyways. So I guess we can get into a little bit about our show. So we're a podcast for investing for beginners in the stock
Smart.
market.
Mhm.
And there's just a lot of people out there that don't know what to do when they first sign up. A lot of people right now, they're downloading Robinhood and they're just buying all these meme stocks, you know?
And that's what they want you to do.
Yeah.
Yeah.
So
So,
as a finance advisor, what do you recommend people do as far as asset allocation when they first sign up for Robinhood or Fidelity or Charles Schwab or whatnot?
well, here's a pillar that kind of my philosophy that we teach with Northwestern Mutual. So there's a triangle square of how you invest. You have the foundation, then you pillar. Obviously, Robert Kiyosaki talked about that as well. But obviously, when you have good debt, so you have to start here. You have good debt and you have bad debt. Good debt is student loans, things that you have to pay or expenses that will require assets either short term or long term. Bad debt, going out to eat, buying cars, et cetera, et cetera. So canceling out the bad debt is first and foremost. So cutting down on credit card expenses, cutting down on certain loans that might not be considered in that good debt. That's first and foremost what you want to do before you start venturing into the stock market. Having that 3 months to as now in COVID, 6 months of emergency fund, incorporating the importance of policies, a Roth IRA, that can get you compound interest. When you invest into the market, the volatility of it is so 50-50 that it can go up and can go down. Avenues like real estate, certain policies in life insurance, having a Roth IRA that could build compound interest are more valuable than in the market at the time. But to answer your question, see, that's the financial advisor part of me. But to answer your question, before you invest, there has to be money that you are willing to lose. Let's say if you have 10,000, you're willing to lose, then that's when you can start dibbling and dabbling. Let's not even go 2,000. Let's go 5,000. So obviously, if you have a call or a share that's roughly at $20, right? You buy 100 shares. Obviously, that's 2,000 that you have to put in. So you don't have to buy 100 shares, but just obviously understanding the corporation, the business, their track record of how they've been the first year to 5 years, how inflation works, how when the stock market crashes, how they levitate and stuff like that. So there's different pillars of knowing who that company is. See, what a lot of people was, they looked on social media and they bought into GameStop and all this other stuff, which is smart. But like the people who, because I remember back in June 2020, I looked at it at GameStop just randomly, and it was about $4.29. Then January 20th of 2021, it was around $14 and some change. January 26th, it was $343. So if you, all the people that were buying puts or calls were thinking that it was going to, like, go up or go down. Some people made a killing in that, and some people didn't. But understanding the end game, like to get in and get out. But that's so unpredictable because nobody on planet Earth knew a year ago that GameStop would be, the first $1 billion to make it on the stock market in the first 24 hours. So we're just kind of understanding how, with history, how the stock market works. So it's like having a lot of homework. But and then you have to know about if you're in it for the long term or the short term. So you want instant income or do you want passive income in the future? So just understanding what your needs and your goals are before going into the stock market and having that availability. Okay, here's $500. I'm willing to lose if I put it in, if I lose. So
yeah, for sure. And I thought everything you said, I definitely agree with. One of the things I always preach to people is, especially new investors, is invest in ETFs. Like start out with an S&P 500 fund, VOO, and just dollar cost average into it. And it's tough to get people into that mindset at first. And it's why I like to bring on people that are smarter than me and more qualified than me, like yourself, and that can help explain this to people. And it's just a more powerful message coming from someone that like yourself. And it pains me to see people wasting their hard-earned money on these like speculation things rather than being smart and building a foundation. So as far as like ETFs, how do you feel about that? ETFs?
Yeah, so exchange trade funds. So I think with those mutual funds, it's the less risky and the kind of more safer side, whether the short term or the long term. So like you said, the S&P 100, 400, 500, Vanguard. So putting your things in that. So the code for that is SPY. So SPY. If you're looking into like E-Trader or Robinhood or Ameritrade. But here's another thing. There's a lot of people, I'm not putting anything out there, but I've been hearing a lot of people are taking their funds from Robinhood and putting it into other
I'm one of them.
vehicles. So I want to see how that's going to transpire as far as Robinhood is concerned.
Yeah, I started out with Robinhood, and once I started acquiring enough money in there where I was like, I don't know if I feel as comfortable anymore. There's no phone number to call. So I ended up switching to Fidelity and transferring all my assets. And, I wasn't really as concerned about them stopping trades. It wasn't really the main reason why, because I know a lot of other brokerages did that. I don't feel comfortable with a brokerage where I can't actually physically call them and speak to a human.
Right.
So that, how do you?
So yeah, sorry. Go back to.
No.
But I think starting off, it's having that money that you're willing to lose. So like putting aside, I have my rent, I have my groceries, I have my cell phone bill, I have my emergency fund, and then using those funds, that extra play money, that $20 from Starbucks, or that going out, and then putting so that it can gain interest. So I think ETFs are a good start. Or even there, like if you want to like go into something like I remember purchasing Roku, a couple shares in Roku um, last summer, and then it calmed down a lot for me starting now. So just like even if you're not gonna go the ETF route, then understanding and knowing the market and how it works for whatever company you want to look into.
Yeah, yeah, like invest in companies you know and you use.
Right.
So, what is your recommendation for a bond? Because a lot of people talk about asset allocation with stocks, bonds, commodities. How do you feel about bonds nowadays? Are bonds a good buy considering interest rates are so low, and as interest rates go up, you would think the yield on bonds is going to go down in the future?
Right. My suggestion is yes, to a certain extent. Um, those municipal bonds are something good to look at sometimes. The REITs are something to look at.
So that's the real estate.
That's the real
Yeah.
estate
Yeah.
sector. So I think in some instances, and all this depends on where it is you are in life, how much liquidity you have, and what your end goal and what your goal is as far as when it comes to the stocks versus like bonds. So you have the preferred stock, the common stock, and then the certain bonds. So that's kind of how I can answer that. It's so tricky on having a slight individual answer, if that makes sense.
Yeah, yeah. As a portfolio manager, what is your take on commodities like gold and silver? Should people be investing in those?
Um, Again, I would out of those two, I would say more on the gold side. Now, I'm not giving anyone advice as far as
Yeah,
silver
yeah.
gold, but I would say more on that side, more of the gold. I would fund my money in different avenues as far as that. But if I were to choose in that type of sector realm, then I would go more the gold route than the silver at the time.
That makes sense. That was kind of my take on it as well. So how do you feel about the biggest thing that's trending right now is Dogecoin and
Yeah.
Bitcoin? How do you feel about cryptocurrencies?
It's so crazy is I wasn't big into the cryptocurrency or Bitcoin at first. So this was like a couple years ago when everybody was like seeing so much profit from 5 years previous, and then it all went down. So I have a lot of friends that are into the trading and the Bitcoin and the cyber currency. As you're seeing, like Elon Musk is backed into it now. Mark Cuban. So I think it's going to be pretty big and vital in the future. It's not something personally I've gotten myself into, me personally as Marcus Peterson, but I think it is a good thing, and I think it's going to be a good route, especially like seeing how the dollar might devaluate itself, and just how you can start now using Bitcoin to purchase certain things. So like you have cash, not cash, but you have kind of assets in a Bitcoin account or cyber currency, cryptocurrency, and you can use it to purchase things. So I think we're going to see a lot of change within this next 3 to 10 years when it comes to that cyber currency. Obviously, I'm going to get into it as I learn more and as I kind of like put myself more into it. But I personally don't indulge in the cyber currency, the cryptocurrency yet.
Yeah, so you're more high on Bitcoin than Dogecoin, obviously, or
Yeah,
Dogcoin,
but I've been
whatever.
hearing a lot of good things about Dogecoin. But if I were to go into it, so that's why I don't want to put that out there because I don't indulge myself in my personal assets because I would never advise somebody to do something that I'm not currently doing. But I do think it's a great avenue. I know a lot of people in my circle who are building a lot of wealth from that. But to answer your question, me personally, I kind of really don't have any say so in that sector.
Yeah, I totally agree with you. I invest a little bit in Bitcoin, but I'm still really skeptical on cryptocurrency. I don't know,
Yeah.
especially Bitcoin. I could kind of see it's making moves. It's PayPal's starting to accept
Yeah.
Bitcoin,
Yeah.
and
I even heard something about I don't know if it's true, but something about Starbucks.
yeah, there was a NFL player actually that said I saw there was an article he took half his salary in Bitcoin, but then it was retracted. He said he got paid and then he put half of his salary into Bitcoin. I can't remember. It was a center from from the Cardinals, or not the Cardinals, the Carolina Panthers. I can't remember his name, but I was shocked to see that they were going to pay him in Bitcoin. But then I guess they retracted the story and said that that's not true. But that would be game changing if the NFL started paying some players in Bitcoin, right?
I think it would have to be a long time from now because first of all, players wouldn't have the full knowledge they have versus Bitcoin versus the US dollar. So you have this knowledge of the US dollar because you have 27 odd years of knowledge of that. And then a lot of people are going to be skeptical on when they get paid on Bitcoin. Some people obviously who know and understand, they might say, okay, but the majority of athletes right this second 2021 are probably going to be apprehensive on that. But I can see down the line 5 years from now, you might have an incentive of 20 tackles, certain amount of Bitcoin. It's going to be, the future is going to be crazy.
Yeah. So I think the final thing I would want to ask is, as someone that's a new investor, what are the biggest things to avoid or mistakes that you're seeing from people that are new?
Following the hype.
Jumping on the memes type stocks.
Yeah, as we seen 2 weeks ago, man. First you had GameStop, then you had AMC, which AMC was in the negative ever since COVID started, even before. So, and it's good because I was buying shares at that time because I thought it was going to like rise. But I think not just jumping into the hype of things just because you're hearing your friends on the internet or seeing CNNBC talk about this is going to be the next stuff. And then also too, they have a lot of those websites out there where it's like, hey, pay me, $700, and then I'll give you like this course of what's the best thing. Like I saw Yahoo in 1980s, and so stuff like that to kind of stay away from. But doing more homework, like you have to know. So like, free course 2021. You have free courses on YouTube. The internet has everything. Getting with the financial advisor to help not only show and break down how things work, but that has your best interest as well. So not just going out there just purchasing, Tesla and just buying options just because they give you the liberty to do so, but understanding how call works, put versus long versus short, when you think it will go up or down, but really understanding how the option trading works. And again, I can't say this enough, but understanding what your goal is. Am I trying to see money now, or am I trying to see money long term? So the options is more the short term because you can kind of get your money more quicker, if that makes sense. But purchasing those shares and options so that your money can grow long term. So obviously with the market growing up and down, you can see January 2021, you put 10,000 in the stock market, going back to the ETFs, SPY, things like that nature, or buying some shares. The idea is for by December 31st, the end of the year, first day of the year, the last day of the year, is to have grown, if that makes sense. But not just short term, but long term.
Yeah, that's great advice, and you've been so helpful, and I appreciate you taking your time to talk to me. And I think
thank you for having me here.
I appreciate it, and everybody can find you on All American. Is that on the CW network?
Yeah, so for here in LA, I know your listeners are nationwide, but that's on Channel 5. So it is the CW, and also now they have a CW app where you can go online and watch it, or thecw.com. And then you go to All American, you can see. But it's a great story, great show. There's 3 seasons. There's season 1, 2, and 3. We're on season 3 now. I believe episode 5, but it's based on, young individual from here in Los Angeles, California, going through the trials and tribulations of football and his community and what he wants to do, battling of what's going on in his community versus his own life. So he's trying to juggle two worlds in one body. So it's a great show, very relatable to a multitude of cultures and a multitude of individuals. So it's very good, and it's the #1 show right now. I remember it came out, it had the same ratings, or it was tied with or had more viewers than The Bachelor, which is huge.
Yeah, I told my brother before we filmed this, I was like, oh, I'm having Marcus Peterson on the show. And I sent him your Instagram and he goes, oh my God, he's on the show All Americans, that he
Yeah.
watches the show. He's like, that's awesome.
Yeah, it's a
So
great show, man. Great writers
yeah,
too.
that's awesome. And we could find, I'll attach your Instagram link and some of your links
Perfect.
in the video too. I appreciate it so much, man.
Tony, it's been a pleasure. Thanks so much.
Take care.
All right, have a good one.
You too.